Good evening, everyone. Welcome to the channel. Today I am going to talk about Ctihk, interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. China Tobacco International (HK) Company Limited offers a diverse range of businesses and services across various segments. These include exporting tobacco leaf products to Southeast Asia, Hong Kong, Macau, Taiwan, and the European region, importing tobacco leaf products to mainland China, and internationally exporting cigarettes to duty-paid retailers, duty-free operators, and wholesalers in mainland China, and globally selling cigarettes through distributors exporting new tobacco products to retailers, wholesalers, and independent third parties procuring, processing, and selling tobacco leaves in Brazil, and internationally procuring agricultural materials related to tobacco production in Brazil and internationally. Ctihk stock price has skyrocketed by 140% in the past year, reaching record highs. Several key developments have contributed to this surge. The company's strong financial results, with double-digit growth in profit and revenue, have boosted investor confidence. Its monopolistic market position as the sole importer and exporter of cigarettes in China also plays a significant role. Additionally, Ctihk's growth in new tobacco products, such as heated not burn (HNB) products, has seen a 12.5% year-on-year increase, with a 22.9% rise in gross profit for this segment. The company's efficient asset-light model and commitment to shareholder returns through dividend distribution have also contributed to its success. Furthermore, Ctihk's recent upgrade of its MSCI ESG rating from BB to BBB reflects its advancements in environmental, social, and corporate governance practices. Analysts polled by Bloomberg Data anticipate a 14% revenue growth for the company in 2025, further supporting its stock price surge. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. 1. Increase in export volume and accurate pricing strategies in tobacco leaf products and cigarettes export business. 2. Organic and inorganic growth through international capital platform, enhanced supply chain resilience and stability. 3. Increased sales volume in duty-free market and accelerated innovation in new tobacco products. Revenue decline drivers. 1. Decrease in export volume of new tobacco products due to geopolitical conflicts and changes in regulatory policies. 2. Adverse impact of extreme weather conditions on production and cultivation period. 3. Significant changes in product structure with higher sales proportion of lower unit sale price products. These drivers highlight the key factors influencing the company's revenue growth or decline, including market conditions, supply chain resilience, innovation, and regulatory policies. Net income and profit margins. A changing landscape. The financial summary reveals a mixed picture for net income and profit margins. Net income increased by 9.8% from HK $643,341 to HK $706,353, likely due to higher annual caps and transaction amounts. However, there is no specific information on changes in pages 12, 15, 22, 25, 31, 37, 40, and 42. Profit margins tell a different story. They decreased by 1.8% due to a decrease in gross profit from $964,215 to $946,476. However, there are instances where profit margins increased for incremental business, with rates ranging from 1% to 5% or more than 5%. Additionally, the company's efforts to effectively raise the overall unit selling price and enhance profitability in certain businesses imply a slight increase in profit margins. Overall, the changes in net income and profit margins are complex and influenced by various factors. The company's financial performance indicates a significant achievement in its ability to generate cash from its core operations. A key indicator of this success is the generation of positive operating cash flow, which signifies that the company is capable of producing sufficient funds to cover its operational expenses and invest in growth initiatives without relying on external financing. This accomplishment underscores the company's financial stability and resilience, positioning it for continued growth and expansion. The company's debt level and interest expenses have undergone significant changes in recent periods. Notably, the total liabilities have decreased by HK $327,500, while the total debt has dropped by a substantial HK $415,000, $769, minus 14.2%. This reduction in debt is accompanied by a notable decrease in interest expenses, which have fallen by 28.3% from $115,463 to $2,902. The decline in interest expenses can be attributed to a lower weighted average interest rate, further underscoring the company's efforts to manage its financial obligations effectively. Overall, these changes indicate a positive trend in the company's debt management and interest expense reduction. The company's financial performance varied across different segments and regions. On the positive side, the tobacco leaf products export business generated significant revenue of $398,894, with a substantial gross profit of $687,162. The cigarettes business also performed well, producing revenues of $551,775 and $547,323 respectively, alongside notable gross profits. In contrast, the Brazil operation business struggled to make an impact, yielding lower revenues of $195,342 and $393,239 with modest gross profits. Similarly, the new tobacco products export business underperformed, producing meager revenues of $598 and $43,517, along with minimal gross profits. These disparities highlight areas where the company excels and those that require improvement to optimize overall performance. Management's outlook on the company's future. According to management, the company is poised for growth and strategic expansion. By 30 June 2027, they expect ongoing business growth and plan to utilize the remaining proceeds from a specific period. Additionally, the company aims to complete its strategic cooperation with international tobacco companies by the same deadline, including joint exploration and development of emerging markets. This indicates a forward-thinking approach, focusing on long-term success through partnerships and market expansion. The company has a history of paying dividends to its shareholders. This is evident from the financial summary and various pages within the report. Specifically, it is stated that the company has paid dividends, page 56, approved dividends for the prior year, page 54, and even provided the exact amount paid in 2024, $121,338. Furthermore, the final dividend for 2025 was also paid out, $114,421,000, as noted on page 64. Concerns about inventory buildup and supply chain disruption exist. There are valid concerns regarding inventory buildup and supply chain disruption in the industry. Reduced outbound shipment volumes due to geopolitical conflicts pose a significant threat, while suppliers manufacturing equipment failing to meet product market access requirements exacerbate the issue. Furthermore, fluctuations in global tobacco leaf supply necessitate proactive responses from companies to maintain efficiency. Enhancing international resource allocation capabilities is crucial to mitigate these risks and ensure smooth operations amidst geopolitical tensions. That concludes the financial summary for Ctihk. Feel free to comment below, and I will be happy to answer them when possible.